Hi, this is Zach here with a weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday, the 2nd of April. Starting off with the FTSE 100, where we've slowed down near the resistance on the way down, which was 76.40. Just pushed through that and closed below it, so need an end-of-day close through 76.40 to give us the possibility of a move up towards the 50-day moving average, 77.70, and then the promised land at the moment, 78.50. That's February resistance line. The positives at the moment are the way the 50-day moving average is now trading flat rather than down, as it has done for the last few weeks. But the big plus point at the moment, the way the 200-day moving average is rising quite well. Normally a bounce off a rising 200-day line is a decent signal, and so far it's given the FTSE around 240 or 230 points, so not shabby at all. The only thing missing to get a new leg up, is apart from 76.40 plus, is the RSI getting above the neutral 50 level. It's just stuck on there at the moment. On to the DAX, which never had the gloom and doom that the FTSE 100 had. In fact, we've had a very strong bounce over the last week. Unfilled gap to the upside above the rising 50-day line, so it's a stronger market than the FTSE. We created an island reversal there with the gap down at the beginning of March and then a gap higher during the week. That suggests that we should at least break the 15,700 resistance zone at the beginning of the month and head up to 16,200 at that September resistance line projection. Don't want to get too carried away at this stage, but above 16,200 we have a sharper resistance line there from September heading up towards 17,000, perhaps by the end of this month if we are really lucky. But the unfilled gap to the upside on Thursday, very healthy indeed. Moving on to the Dow, which had a decent end to the quarter, breaking back above the 50-day moving average. That's around 33,100, and the reason for suggesting that the FTSE should do the same is because the Dow has already done that. Above that 33,100 level, looking for the main one-year resistance line there at 34,100, which hopefully will hit over the next couple of weeks. RSI well above 50 now at 57, which is almost perfect for a continuation to the upside. And really, if you look at it closely, you can see that both the 50 and 200-day moving average is now rising. So that would be a good signal. It's a good double signal in terms of the upside. Above 34,100, if you're so minded, you'd be looking for 36,000, which seems rather unlikely given all the horrors that we've had of late. But that is the chart at the moment, a rising trend channel there from back in September. If we fail, then it's probably no worse at this point than the 200-day line around 32,400. On to Bitcoin, where we look at it every day, and each day we're hoping that we'll see it above 30,000. So far, that is not the case, but a nice mid-move consolidation bull flag. We've tested the floor of that, 26,700, the old initial March resistance, 26,700 as well. Looking for that elusive end-of-day close above 29,000 to give us 32,000. That seems to be the main level rather than the psychologically important 30,000 at the moment. So if we actually get that end of day close through 29,000, 32,000 should be on its way sometime during April. On to the stocks, and here we've got Abingdon Health, which has managed to regroup quite nicely. We've had higher lows, well, generally higher lows since the low in December, below 4 pence, and we've broken a trend line there from January. That was around 5.5 pence. We've got a rising 50-day moving average as well, so we're looking for not only the 200-day line at around 6 3/4, old February resistance, but up to 9 pence as soon as the end of this month. That might be pushing it, but we've managed to, shares previously managed to. Moving on to the stocks, and the first one is Abingdon Health, where we've had decent turnaround there, sort of an inverted head and shoulders on the chart since back in August. Right shoulder breaking that resistance line there from January around 5.5 pence, and above that we're looking for not only the 200-day moving average around 6 3/4, but up to as high as 9 pence by the end of this month, while we remain above 5.5. The rising 50-day line and the fact that we've managed to have spikes before, even for sort of 3 or 4 days, does suggest that we could hit that 9 pence level relatively quickly, even if the sellers come in again, as they have aggressively on all the recent rallies. So that is also something to watch out for. Well, they're one of the better improving situations of the recent past. Empire Metals, with Sean Bunn, the managing director, doing a great job since he came into the role a while back. Unfilled gap to the upside in October, which didn't go unnoticed, and we basically built on that ever since. Rising 50 and 200-day lines, support on the 50-day line now, and above that 50-day line at 2 pence, we're looking for the top of the rising trend channel from back in October as high as 3.4 pence, ideally by the end of this month. I think the shares have done enough over the recent past, especially with that bounce off neutral 50 on the RSI scale as well, to prove their mettle and develop some momentum. Moving on to Jersey Oil and Gas, which had a great announcement yesterday, and luckily the market took it to its heart. We were trading, I think, just below £2 on Friday morning, and we've managed to get up to the 200-day line around £2.37, an end-of-day close above that, and we could head up to another leg at the top of the November broadening triangle as high as £2.90. And ideally we'll see that by the end of this month, and we're really lucky by the end of next week, but don't want to get too excited at this stage. Stop loss at this stage back below the initial March resistance around £2.16. Onto a stock I've avoided looking at with the recent past, but it looks as though finally deserves a look here. Here we've had a rebound off the floor of this broadening triangle. That's been in place since September. The top of the triangle up to those dizzy heights at 26 pence. Might be that we're actually looking at a less dramatic triangle heading up to 16, so maybe above the 50-day moving average around 9 pence, target 16 pence first, and then maybe 26 pence over, well, maybe by the end of next month. The reason for the inclusion here is the unfilled gap to the upside that we had on Thursday, and we broke the high of that gap up day on Friday, so pretty impressive stuff. That actually sets up an island gap bear trap, so we gapped down at the beginning of last month and gapped up at the end, so looking pretty strong indeed. It's a pretty rare and strong setup, and we've also in theory got bullish divergence there, a long bullish divergence line there from many months ago to back the move higher. This stage only back below the low of Thursday at 6.25, really delaying the idea of a push, ongoing push and recovery to the upside. Ilika is next, and here you can see that we managed to break that line of resistance there from February. That was around the 35 pence level. Above that, looking for the area of the 50 and 200-day moving averages at 50 pence. Top of the channel there up to 80 pence, but maybe it's wise to wait for maybe the next, we'll look to that by the end of May rather than any time sooner than that, but ideally we get up to 50 pence over the next couple of weeks. If you're cautious, you might want to see the shares break the RSI 50 level and deliver the kind of rally that we had at the beginning of the year when we did break that RSI level. So looking well set for Ilika while we're above 35 pence. A strong silent type has been Ironveld over the recent past, and here you can see why I'm saying that. A slow recovery. It looks like the recovery they might start to pick up. We've bounced off the 200-day moving average and the 50-day moving average over the last week, and above that area 0.32, looking for at least 0.47 by the end of the month. And these things, they normally accelerate, and in fact they can even rally with the same ferocity as the decline was. So looking for maybe a U-shaped turnaround for Ironveld over the near term. A stock which I probably wouldn't have looked at, but the charting situation seems to warrant it. Here you can see that the shares have bounced off the lows with basically a double bottom, but also unfilled gap to the upside at the beginning of last week. That's been held, so that 1.8, 1.9 pence level held. Looking for the shares to break the 50-day moving average at 2.25 pence above that. We wouldn't expect the shares to fail this time and head up towards the main resistance here, post-December resistance at 3.3 pence, perhaps as soon as the end of this month, but maybe you might have to give it a little bit longer. Marula has broken all the targets I set for it before, so we're looking for an idea on a fresh target, which might please some of the people in the stock. I think there's quite a few people who've got on the bandwagon there. The wider trend channel It looks as though it's heading towards 17 pence. The old one was basically going towards 12, so above 12, looking for 17 pence on Marula, and that upside valid while we hold above the 10 pence zone, which I think we should do relatively easily. But that situation there with the wider channel and 17 pence, perhaps as soon as the end of this month while we hold above 10 pence. Recovery situation that we were looking for and has actually started to happen is San Leon. Here we're back up at the 50-day moving average, which we achieved rather quickly. We had a gap to the upside after the gap down, so it was an island reversal, bear trap island reversal, and that suggests that the shares should have enough gas in the tank now that they've broken the 50-day moving average around 27 pence to head up to the main resistance line there, top of that broadening triangle from August, as high as 35 or 36 pence by the end of next month. Bullish divergence as well, a very long bullish divergence line, so much lower lows for March versus July, but the RSI trace actually reasonably higher there on San Leon. Great to see Saietta turn around. A lot of people on Twitter were willing it up when it was in the 20s, and I looked at it at that time. So really the neckline break around 23 pence. Resistance on the way down was 26 pence. So once it broke 26, started to fly. We managed to get up to the initial target there, up to 37, 38 pence, which was the resistance line there for December, and above 38, looking for as high as 60 pence by the end of this month. So well done to people who spotted that. The turnaround backed by bullish divergence there, and as well as the neckline break, and bullish divergence seems to have won the day on that situation. Onto a stock which has been falling rather frustratingly over the recent past. Here we've got TAP Global. Interesting that the shares hit the top of the channel there around 6 pence. Looked as though they might go a bit further, but they haven't, or they didn't. Now we've got a line of support there from back in May last year, the old Quetzal days. So that suggests that we've got a floor there at 3 pence. Initial target there up to 3 3/4, and then perhaps the main 5 to 5.5 neckline resistance, or right shoulder resistance rather, could follow after that. Timing on that maybe by the end of next month, up to end of this month rather, up to the 5 pence area. If this is indeed the low, we have the rising 200-day line to support us as well on that call. On to Technology Minerals, which has staged a decent revival. It was actually requested during the week and has made good on that request, so thank you for that. Here we've had a bounce off very oversold RSI levels in the low 20s or around 20. A bounce off the floor of that broadening triangle from October, just under a penny. Current situation is that while we're above the 50-day line at 1.17 pence, we're looking for as high as 1.8 pence by the end of this month. That would take us back to where we were basically in the autumn. Just a few stocks to go now. First one is one I haven't looked at for a long time, Tungsten West. Here we've got a situation where the shares kept on going down within that triangle that we had from back in July. It's always difficult to get the exact low in these situations, but I think the shares have finally told us where that is. Here we've got a move down towards, well, we have below 8 pence, but first target here up to 12 pence, and the resistance line there from back in the summer. Next target probably not as high as the old line there, but maybe towards the 20 pence area, and the triangle in place since November. So looking for around 20 pence once we break the 12 pence area. That ties in, 20 pence ties in with the 200-day moving average. At this stage, only well below 8 pence, which was the support on the way down, really delaying the recovery scenario. On to the last two, and starting off with VAST, which I mentioned in my editorial earlier today. Here we've got a sharply rising 50-day moving average, and we had a great hammer candle on Friday, a very, very strong one indeed. That suggests that we're ready to break that line of resistance from February. That's around 0.65, above 0.65, looking for the top of that broadening triangle from the beginning of February as high as 0.85, and hopefully we could see that by the end of next month. Ideally, there's no end-of-day close now, back below the 50-day moving average, around 0.55. RSI in the right place as well, tipped over neutral 50 to stand at 58, which is just about right as a continuation signal. Last stock of the day is one which has slowly been improving and doing rather well over the last few sessions. Zenith Energy. We've had that long-dated descending price channel from the summer of 2021, but the shares bounced off the floor of that last month quite well with a hammer candle thrown in. View now is that initially we'll head up to the 50-day moving average of around 0.61 and then up to as high as 0.85 and the top of the falling trend channel maybe by the end of next month. Ideally, we stay above the old support on the way down at 0.48 pence. That's it from me today. More updates during the week.